In this presentation, we're going to add the credit card data into our financial statements. In other words, we added the data into the Xero system from the credit card bank feeds. Now it's in the system, but it's kind of in limbo. And we're going to take it from the limbo feature and then add it to the financial statements. Here we go with Xero. Here we are on our G dashboard. Let's start off by opening up our financial statements. We're going to go to the accounting drop-down. We're going to go on down to the balance sheet. We're going to duplicate the tab by going to the tab up top and duplicating it. Then we're going to go back to the first tab. We're going to do the same for the income statement, selecting the accounting drop-down and going on down to that income statement. Once the income statement then opens up, we're going to duplicate that tab as well by mousing over that tab and right-clicking on it and duplicating that tab. Then we're going to open our reconciliation tab. We're going to go back over to the first one, going to go to the accountant drop-down, go down to the reports, and we're going to go to that reconciliation report. So we're going to go into the accounting, we're going to go into the bank reconciliation. So similar kind of reconciliation we're going to take a look at, even though we have a credit card this time. Notice if I check the bank accounts now, I have two accounts we can look at. We have the credit card and, of course, the checking account. We're going to be doing this as of the end of April. So I'm going to say end of April and update. So there we have that. And then I'm going to right-click and duplicate this tab. So if I go to the balance sheet now and I update the date, I'm going to bring this date up to April. Let's bring it up to April because that's like the transactions are in April that we're going to be entering. So then I'm going to update that. And then I'm going to go to the income statement. Let's bring this on. I'm just going to bring the beginning date up to April 1st. And then there's no transactions after April, so we should be good there. And then on the bank reconciliation, we have changed the dates here. I'm going to hold down Control and scroll up a little bit. So I like to be at that 125 area. That's where I like to be. And so now we have the same kind of reconciliation. We don't have any data in it yet. So here's our information on the balance sheet. We have 0 as of now. And then this is the data that we're going to put into the system. If I open up then our credit card statement here, notice once again we have a beginning balance. So that's going to be kind of a problem here because we don't have that in our system. We only have the transactions. And then we have the data that happened. We had a customer payment here, and then the charges that are going to go out, and then this is going to be the new balance, which of course is this, this minus the payment plus the new charges, and that's going to be our ending balance. Also, just realize with the bank statement, the most prominent date on the bank statement will often not be the ending statement date as of like the end of the month. It'll be when the money's due, so just remember when you're looking at the data that you're inputting into the system, and you're trying to reconcile, you're kind of looking for that statement date, when are the transactions ending as of, and then consider, of course, when the payment will be due for that particular statement. So it might be a little confusing. It's a little bit more confusing to look at, I think, a bank than a bank statement. Maybe I've just looked at more banks. I don't know. Anyways, I'm going to go back to the first tab, accounting drop down, and we're going to go down to the bank accounts, and then we're going to be taking a look at the credit card. So we got the credit card information. We have these 9 items. We want to add those 9 items. So I'm going to go into those 9 items and be updating that. And we're going to just go through this in the same fashion that we have for the bank accounts. We're just going to make these transactions as we go. We're going to be dependent on the credit card. We're not recording the transaction as we record them into the credit card, which would be nice because then we could just match them out in a similar fashion. However, we're just recording everything to the credit card, and then when the credit card statement comes in, we're going to say, all right, we're going to construct our books from the credit card statement. So let's first start with the outflow. So for example, we have here Office Depot. So Office Depot, I'm going to assume this is office supplies. And like we say, we'll talk about bank rules later. Like it might be if it's over a certain dollar amount, it might be furniture and fixtures. So we might want to set a rule for a dollar limitation. I'm not going to set up the rules here. That will have the same kind of rule situation, and we'll talk more about rules later, and we'll have the same kind of suggestion situations because we're using the same feature. So in other words, once we did this for 1 month, the second month of operations, it would tend to populate more on its own. So I'm going to say here, I'm just going to copy Office Depot. I'm going to do this a bit more quickly because we've seen the same process for the bank feeds. So I'm going to put this to office supplies. So let's see if we can go to office supplies. And then we could put a description if we so choose. And that's it. We've added it to our side. Once I hit OK, it's going to match this out. It's going to add it to our side and, reconcile it as we go. So I'm going to say okay. Obviously, if I go to the balance sheet now, we should see a balance sheet transaction for the credit card. Notice it's in the liability section because now that we're entering the payments, it's like a bank charge that's overdrawn. So even though it's a bank type of account, it's kind of like an overdrawn bank account. That's how it's showing down here in the liability section, even though it's a bank account type of account. Income statement, if I go back up top and update the income statement, we will now have more items that are going to be included in the office supplies. The bank reconciliation, if I was to update the bank reconciliation, it's going to change the first amount to balance what is on our balance sheet. That's our balance sheet amount. These are all the reconciling items that we're going to remove by adding them to the system. If we go back to the first tab and we take a look at the bank statement information, this has all the information that we uploaded, just the bank side of things, and now we've reconciled this one item. If we go to the account transactions, these are the account transactions that we have added, just this one, with regard to that one transaction. Let's keep going. Going back to the reconciliation tab, we're going to keep going through this process. We're going to say now we have the Frank's Grill. Now the question here is this personal or is this going to be a business type of activity? Let's see if we have another Edison. Let's pretend that this one is a credit card activity that's actually personal. So it's saying, hey, they went to the grill or some place to eat, and it's not a business expense. Like sometimes the credit card gets mixed up. What if we have a personal expense on it? Well, then we could set that up. It just should go to draws. It's just like if they took money out, we're gonna put it to draws. Now they should take the money out and then go to the grill, on a personal side, and it'll be easier for us to track. So you don't want to have this mixed up. But if you have charges that are personal, let's just pretend this one is instead of business meals and entertainment. I'm going to say, all right, well then that's going to go into Frank's Grill, and then I'm going to set this up to an equity type of account. So I'm going to put this to an equity type of account instead of an expense type of account, and it's going to go to Owner's Capital Investments Draws. So it would be similar to taking money out and then spending it on the personal whatever. So there it is, and so I'm going to add that one. So I'll add it, and it'll reconcile it. If I go to the balance sheet, what's going to happen once I update it? Now we have the two transactions that have been added with regards to the credit card. So the credit card, if we go into it, has our two transactions down here. The other side then is going to be in the equity section. So we've included it in the draws in the equity section. So it's going to be here on the balance sheet. If we scroll down, it's going to be included in the draws number here. Nothing happened to the income statement. No change to the income statement for that transaction because it was a personal item. Then if we update this amount's going to update to the amount on the balance sheet. So, and we're going to lose that 200. So that 250 is going to be gone. Or was it 250? It was some other amount down here that was for the grill. It has been disappeared now. And now we're going to go back to the first tab. And let's do this again. Amazon. Let's say that's office supplies again. And Amazon's one of those confusing ones that we could be buying multiple different things from Amazon. I'm just going to add it to office supplies here. So I'm going to say Amazon. I'm going to say office supplies, and then we'll add that transaction. So I won't go through it. Same kind of item here. This will decrease or increase the expense on the income statement, decreasing net income, and it'll be an effect on the balance sheet with the credit card account. Verizon's going to be our phone bill. Going to add the phone bill. Now note that it's on the credit card here, and even though we've paid Verizon before, it's not giving us a suggestion on the right because we haven't yet paid it with the credit card. If the Verizon showed up on the bank feeds, it would show up as a suggestion most likely. So if we keep paying it on the credit card, then next time it'll typically show up as a suggestion to say, hey, do you want that to be going to the telephone expense? And if it was, we can then make a rule for it if we choose to. So I'm going to say, okay, same item there. We added it. It's going to decrease, it's going to increase the liability on the credit card, the other side going to an expense. Edison, that's going to be our utility bill for the electric. So I'm going to add that. We made a rule for Edison when we did the bank feeds in for the bank, but we set up that rule. And note, when we set up the rule, we said only apply it to the bank accounts. We didn't apply it to the credit card account. Now we could have said apply this to all accounts, and that rule would probably be picked up here and apply. So we could adjust that rule to pick up all accounts. We haven't done that. Therefore, we're going to pick up the Edison here. If we set up a rule, it'll apply. If we don't, it'll probably suggest it in the future to go to the account that we choose. And we're going to be putting it to the, of course, utilities account. So utilities account, adding that, same kind of activity. Office Depot, again, I'm going to say this is office supplies. Notice that it's adding it for us now. So see how it says it's giving us a suggestion. Say, hey, look, you've done that before. We're going to suggest that we put it there again. Also note that we're currently in May. So when we downloaded the data from the credit card statement, it didn't just have a cutoff just at the end of the month. And that's often the case. If you download from a credit card statement, you're just going to get the downloads kind of real time. So now we're kind of duplicating the information. That's why it's repeating itself. And so now we're going to get some of those suggestions. So I'm going to say, yeah, that looks good. I'm going to add that. It's not going to affect the financials we're looking at now because we're looking at April. This will affect, of course, May. And then I'm going to do the Verizon. These two look like duplicates as well. If I refresh the screen, Xero may pick these up. So I'm going to refresh the screen and see if Xero then picks those items up. So let's scroll on down. And so now we have the suggestions for it. So the Verizon now going to the phone company. It's not a rule, but it's a suggestion, and it's picking up the correct component. So I'm going to say, yes, let's do that. And then we have Edison. Again, not a rule, a suggestion, but it's picking up the correct suggestion. I'm going to say yes to that. Now this side is going to be a payment. This is a payment that we made on the account. So this needs to be, decreasing the liability because we made a payment on it. So I'm going to say this is going to go to American Express. Now the other side, this is where it gets a little bit tricky because the other side of this should go to the checking account because we're going to pay this out of the checking account. But notice on the checking account, we're going to have an amount that's in the bank feeds on the checking account, where the other side should be going here to the credit card account. In other words, we have an interbank fee transaction, right? We're going to have the payment coming out of the checking account, which will be seen on the bank feeds. And then on the credit card side of things, we're going to have the payment being seen on the credit card, which will show up on the bank feeds, and the other side should be hitting each other. So in that case, you could put it, if I put this on either transaction and record it to the other side, it should be able to match it. Like I should be able to match the transaction. In other words, if I took this to the checking account, then I'll have a decrease in the checking account. And when I process the bank feeds and see that $250 decrease on the checking account, the system should see it and I should be able to match it up. Now that could be a little bit confusing when you're doing these bank feeds kind of at the same time, because it might not match them up and you might end up duplicating it. Another thing you can think about is maybe I use a clearing account. Maybe I put this into some other clearing account so that the other side of this transaction is going to go to that account, a clearing account. And then when it clears the bank, I'll do the same thing. It went to American Express, so then I'll have it go to the clearing account, and the clearing account will always match out and tie it out and then bring it back down to zero. So what that would look like, let's just take a look at that. If I set up like a clearing account, let's make it a credit card clearing account. So let's put it in another current liability type of account. And I'm going to have to add the details down here to do that. And then I'll go on down and item description. We're going to say the account is going to be some type of liability account. So if I go on down to the liabilities, let's put it under 2055. So I'm going to make a 2055 account. So it's going to add this. It's going to be 2055. I'm going to say the type is going to be an other current liability. So it's going to be a current liability account, and it's going to be credit card clearing account. So then, and did I spell that wrong? I did. Whatever. Clearing, and that's what I'll call it. All right. So then I'm going to say save. And then let's record this and see what happens. I'm going to go ahead and save this. And then we're going to match this one out. So now let's match this one out and see what happens. If we go up to our balance sheet, then I'm going to update. We'll update the balance sheet. And then I'm going to scroll back down. Now within the balance sheet, we've got the $250 for the credit card American Express. And that's going to be the transactions that have been put in place. We're going to have to reconcile that to the bank statement, which currently has the $1,250 because we're missing the $1,000 beginning balance, which we're going to have to add. And then we made a payment of $250, which is showing up in the credit card data as a payment from the checking account. We put the other side of that in the credit card clearing account. So that's going to be here in the clearing account. Now, when we get the bank feeds from the bank, from our checking account, it's going to show money going out from the checking account, the other side going to the credit card. When we do that, we'll take that $250, decrease the checking account, and then the other side will go here, matching this out, and it'll match out, and that'll be back down to zero. So in other words, after we do the bank feeds for both the credit cards and the bank, this clearing account should be back down to zero, and we should see both sides of the transaction kind of washing off or washing out to zero within this clearing account. Then if we go to the income statement, if we update the income statement, we should see the transactions that we have included down here. So we added some items to the telephone, utilities, and all the expense accounts now being added. And notice this is kind of an accrual type of basis here because we have a credit card. We didn't actually pay cash. We're recording these as the credit card as we charge them on the credit card with the credit card statement. And then if we go to the bank reconciliation at this point in time, once I update this first balance is going to tie out to what's on the balance sheet. So let's go, and these will disappear down below. So let's update that. And we're going to say update. This now is at the 250. That's what's on the balance sheet. If we go to the balance sheet, that matches the 250 here. And the ending balance is 250. Now, it's not reconciling to the bank statement yet, to the credit card statement, because we're missing, again, that beginning balance, which is often the problem when you first start the credit card. So we'll take a look at that next time, how we can add that. If I go back into the first tab, now we have reconciled here. We're not quite done. This is kind of deceiving because we haven't yet reconciled, because we haven't tied it out to the bank statement yet because we're not matching out. So we'll take a look at that. But it's nice that they give us that nice little green thing. We're doing good so far. And then we're going to the bank statement. All of these items have been reconciled. All the ones that we included are reconciled. That doesn't mean we're quite done yet because we haven't reconciled to the bank statement or the credit card statement yet. And the system doesn't really know that because when we don't have the statement in the system. We only have the data, the transaction that has cleared. So they know everything has cleared, and that should usually indicate that we're reconciled, but there are exceptions, including this time with the beginning balance. And then we're going to go to the accounts transactions. These are all the accounts that we have added. So we added all these accounts now with the bank feeds. So we took them out of limbo. We know once the stuff's in limbo, they're good. It's going to come to the good land of the financial statements. We just have to basically, add them there. And so that's what we did. We added them all there and reconciled them at the same time. This is the data that we use to create the balance sheet and the income statement. Next time, we're going to go into the beginning balance to complete basically our bank reconciliation. And so that's it for now. Let's get out of here.